invite somebody to the table, we want them to have more than a four. At the Small Business Administration, prior to the bank making you a loan, they want you to have something going forward. To determine whether a bank is borrower friendly, the bank has what we call the 5 C's of credit. And everybody should have a pink sheet on the right side of their turquoise bar. The first one is character. We look at your credit report, and usually banks like to see a credit score of 700 north. Prior to us falling into the economic abyss of the fourth quarter of 08, banks would accept credit scores of 650. Now they usually want 700 up. We look at that credit score. So how many of you have pulled your credit report in the last 6 months? It's very good to do that because identity theft is running rampant. Not only is identity theft running rampant, but the credit bureau has some interesting practices. If you have the same first and last name as somebody else, they will merge the 2 reports. I had a relative that married in the era where if you had a husband, you couldn't get credit in your own name. Well, they divorced, and she saw credit, and she didn't hear from them. Called them and said, hey, what's the status of it? We can't tell you over the phone. How many of y'all know that is a good news? Wait, she went in and they showed her these claims, these judgments, and all this stuff on her credit report. And my relative said, I am not this person. I have a different address. I have a different social security number. The lady at the credit bureau asked my relative, are you sure you're not married to Harvey? And my relative said, I made one mistake and one mistake only. It was James, not Harvey. So this relative wasn't even a victim of identity theft. They had just merged the reports together. And to complicate matters further, they had the same employer, different positions. So she was able to get everything resolved. Be proactive prior to going to the financial institution. In the case you're a victim of identity theft, in case you're the victim of credit bureau practices, get that situation resolved before the people at the bank look at your credit report. Next, we have cash flow. They talked earlier about the importance of business planning. As a part of business planning, you answer 4 questions. Where are you now? Where do you want to go? How do you plan to get there? And how will you know when you're there? I do it all the time when I travel. Let's say I'm going to Kingsport, Tennessee. Where am I now? Nashville. Where do I want to go? Kingsport. How do I plan to get there? Now that's contingent on how much money I have. If I have a lot of money, I can take a plane. Let's say I'm afraid of flying, I can get a limousine.
Right.
But let's say I have my privately owned vehicle that I can use. Well, let's say I can get a bus ticket, and if I have no money, what can I do? You can walk. I told somebody, just give me a room, and I'll fly there on it. So, and how will you know when you're there? And those 4 questions revolve around money, management, and market. And for the money, how much money do I have? Do I go on a carrier? Do I ride the bus? Or do I walk? Management. If I want to be in East Tennessee, Kingsport, Tennessee at 10 o'clock, what time do I need to leave Nashville?
Check your iPhone.
6 o'clock. Is 6 o'clock good with everybody? We know that Nashville, Tennessee is on what time zone? And we know that Kingsport is on what time zone? Okay. So let's say I can get to Knoxville. I can't get to Kingsport. But for 3 hours, when it's 9 o'clock here, it's 10 o'clock there. So I can get to Knoxville by 10 o'clock. It takes like 5 hours to get to Kingsport. So you integrate that into the equation. And once I get there, I need to know how many people will be present, how many folders I need to have. And as far as the marketing aspect, we have small business development centers across the state of Tennessee that market our workshops. So that's what the business plan entails. In the business plan, you will do some cash flow projections where you list the anticipated revenue and the anticipated expenses. The money left over between the two is indicative of cash flow. We make sure that that is positive. Not only do we make sure it's positive, we make sure that it's sufficient enough for SBA debt service in the case the loan is approved. Next, we look at collateral. Usually, we want to collateralize the loans 100%, but we do have some loan programs for which no collateral is required, and we will talk about that momentarily. Next, capitalization. For capitalization, we're talking about skin in the game. SBA doesn't do any 100% finance. For skin in the game, the bank usually wants to see a cash injection from you, the entrepreneur, of 20 to 30%. Some industries are more volatile than others. The restaurant industry, perishable inventory, people coming and going, volatile industry. The bank may want you to inject 30%. The chiropractic industry. Chiropractic, historically, have had a way of repaying their SBA guaranteed loans. A bank may just want 20% from them, but we want some skin in the game because we found that people work that much harder to make the entity a going concern once they channel some of their resources into it. Lastly, conditions. We look to see whether there's a market for your products or services. Right now, do you think SBA will make somebody a loan to inventory typewriters for retail sale? With the introduction of computers, typewriters are virtually obsolete. There may be some authors out there like Harper Lee, author of To Kill a Mockingbird, who has a manual typewriter or something like that. But for the most of us, we use a computer. Now, what happened with travel and tourism right after 9/11? Plummeted. Unfortunately, it readjusted. Right at that time, we probably wouldn't have made anybody a loan to build a hotel for the mere reason existing structures were empty. People wanted to feel safe, and in feeling safe, they equated that with staying close to home and buying pizza and other comfort food. So we look at the 5 C's of credit. On the next page, and this was shared by Williams in his presentation, you get a free annual credit report. I'm sure people who assemble on a sunny Saturday afternoon to listen to this presentation, that you're proactive and already aware of this, but we wanted to call it to your attention again. In the upper left-hand corner of that website, www.annualcreditreport.com. And when you go to the financial institution, you can even ask them, what credit bureau do you utilize? Pull that report, make sure everything's okay. Some financial institutions have a tripartite report where they can look at Equifax, Experian, and TransUnion. And something may be on Equifax that's not on TransUnion, and vice versa. So please pull your credit report prior to making application to the financial institution. Now we're getting ready to go into the PowerPoint presentation, and there's a copy of it in your folder. And we've covered the 5 C's of credit, so we're on the last slide on page 1. With the SBA guaranteed loans, we do not do direct lending. We deal with what we call participating lenders, banks that are willing to make SBA guaranteed loans. On the left side of your turquoise folder, you have a small business resource guide. If you would turn to page 47, on pages 47 through 59, we have a listing of our participating lenders throughout the state of Tennessee, broken down by county. So these are the banks that do the SBA guaranteed loans. Now there are 2 schools of thought, and I'll tell you both of them. SBA theory, when you're seeking a loan, is to go with your bank account, where you have your checking account, where you have your mortgage and everything else, because they know a lot about you. I talk to a paralegal. And I was given this information, and in the middle of the presentation, she said no. And of course, I was shocked. But she said that the banks have a clause called right to offset. So if you get your business account, where your personal account is, and something goes awry with your health or with technology, and you cannot repay the loan, the bank can go into your checking account, your money market account, and other accounts, take the money out like a Hoover vacuum cleaner, because they have the right to offset the remaining balance. So what you can do is go to another financial institution, establish your business account there, and if you get a loan at that bank, they will not have access to your personal account and cannot take money back. That was shocking for me to learn. Now, with these banks on pages 47 through 59, these are Tennessee banks, but let me share with you, you can deal with any financial institution in the nation. If they're willing to make an SBA loan, we're willing to work with them. And one of our top volume lenders was in California. When I started in 1989, the bank wanted to be close to the ball. So if something went awry, you could jump in your car and knock on the door and say, hey, what's going on? Things have changed with technology. So she's in California, Walnut Creek, California, and she makes loans to individuals in the Southeast. So with the financial institutions, some of the financial institutions are autonomous. They can make, monitor, and service the loans, and they do not have to communicate with us at SBA. Other banks, there needs to be a consensus between the bank and SBA prior to the funds being dispersed. We're going to the next slide now. We have a number of SBA loans. When I came aboard in '89, we had the 7A loan, and we had the 504 loan, and none of this stuff in between was worked. When I came aboard, if you needed 5,000 or 500,000, you had to go to 7A. And that was a lot of paperwork. We got an administrator, a former investment banker from North Carolina, and his buddies, and he said, that ain't right. That's a laborious process to get $5,000 if that's all you're seeking. He created a loan program that's no longer around, but due to his innovative thinking, other loan programs have been birthed that require little paperwork. Now, we need to look at the eligibility requirements. Ms. Bob said that she is a for-profit entity. We make SBA loans to for-profit entities. I know you've seen our disaster loans. That's a horse of a different color, because we make loans to homeowners, renters, and everything under that program. But under our business loan program, for-profit entities only. Next, you cannot exceed the size standards. Finding out your size standard is a two-part process. You look up your 6-digit NAICS code, North American Industry Classification System code, and then you look up your corresponding size in the table of size standards. If you're just 1 or 2 years old, you don't need to look this up, you're probably small. I'll be here after the workshop, so if you want to look up your NAICS code or your size standard, you may. Website addresses for the NAICS code: www.census.gov/NAICS. N like Nancy, A like Andy, I like India, C like Carla, S like Sam. www.census.gov/NAICS. And for the table of small business size standards, you see my business? Oh, let's turn to the very last page of the presentation. And you'll see the website at the bottom of the page, www.sba.gov/TN. After that front slash, put size, S-I-Z-E. And you will be able to access the table of small business size standards. must be for-profit, must be a small business. You cannot be engaged in lending, real estate development, investments, or speculation. A lot of people want to buy an apartment building, rehab it, renovate it, and lease it out to tenants. We consider that to be an investment. It would not be eligible for an SBA loan. Next, not be engaged in the promotion of a specific religion. This is an interesting one because we can make somebody a loan for a Christian bookstore, but if you have workshops in there conveying different ideologies, trying to convert people to certain denominations, that would make it ineligible. Next, not restrict patronage. By a show of hands, how many of y'all have seen a man working out at Curves? C-U-R-V-E-S. Okay. In some parts of the state, men do work out there. I was shocked to learn that. But here in the Southeast, Curves is for women only. I used to watch Dr. Phil every day. And every day there was a lady over there. She was a tad overweight. And she would say, well, if I was just a little small, I'd feel better about myself. And Dr. Phil would say body image and self-image are not the same thing. And so Curves knows that in our culture, body image and self-image are synonymous. So they created an environment where women can work out and just be around other women and no men. Brilliant idea, but it restricts patronage. So it is ineligible for an SBA loan. Same thing with the hunting lodge. Let's say you can go to the hunting club with your husband or with your uncle, but you, as a female, cannot have an outright membership. That too restricts patronage and would not be eligible for an SBA loan. Next, not engage in prurient sexual materials and services. No XXX bookstores. And somebody asked me in one of the workshops, what about double X bookstores? Not that.
None of it.
Not be a gambling enterprise. Now this one's interesting because we all know that gambling is legal to a degree in the state of Tennessee, but if not more than a third of an entity's revenue is generated from gambling proceeds, they would be eligible for an SBA loan. And y'all seen the convenience marts and gas stations where the convenience mart sells the lottery tickets. Just sell more fuel in Cheetos than you lottery This is not up here, but we all know about the legalization of marijuana in Colorado and Washington State and how it's increasing in popularity. Just want to share with you, if it becomes legal in the state of Tennessee, you cannot get an SBA loan for finance. Who regulates the banks? The federal government. The federal government sees marijuana as a Schedule I drug on par with heroin. And I see that as fascinating. But they do. So a bank could not finance a marijuana shop in Colorado or Washington State. And just an aside from the presentation, in the case you go to Colorado, please know that you can, if you buy marijuana, you cannot smoke it on the streets, and you cannot smoke it in a hotel room. You can only smoke it in a private residence. And let's say you're just there in the hotel. With you being the law-abiding citizen that you are, you pack it up to take it home to smoke. Well, when you get to the airport, they have amnesty boxes. Because when you cross state lines with that marijuana, it's legal in Colorado, but it's not legal in the adjacent state, and it is a federal offense. And in those stores, they told me, I've never been to one, of course, they sell candy, they sell edible marijuana. And it's called Reese's. You know Reese's? It's the same package. Only it's Reese's and it's that edible marijuana. If you pack that up to eat that when you get home, again, that is a federal offense. So if you move to Colorado, Washington State, or marijuana is legalized here in Tennessee, just wanted to let you know it would not be eligible for an SBA loan. Now, a lot of people call me and they say, Jackie, I want one of those low interest loans. And it's like, and I wish I could give you one. SBA does not have low interest loans. Our competitive edge over the financial institutions is that we offer a longer repayment term. For working capital, 7 to 10 years. For plant property and equipment, 25 years, not to exceed the usefulness of the equipment. Now, taking a look at our interest rate, the interest is based on the Wall Street Journal prime rate plus an added percentage. Who in here can tell me what prime is right now? Prime is the rate that other than Williams and Cunningham. Who can tell me what prime is right now? And prime is the interest rate that the bank charges its best customers. Okay, Williams, we're going to have to default to you. 3.25. 3 1/4. And it's been 3 1/4 for the longest. How many years has it been 3 1/4?
I'd say probably 8 or 9 years now.
Yeah. It's been a long time. So the interest is based on prime plus a certain percentage. The percentage is contingent on the dollar amount and the repayment term. If you get a loan up to $24,999 to be repaid in less than 7 years, it's prime plus 4 1/4. In excess of 7 years, prime plus 4 3/4. In excess of $50,000 is where you get the best interest rate. It is 2 1/4 above prime if repaid in less than 7 years, and 2 3/4 above prime if repaid in excess of 7 years. Now, another benefit, and this is for the financial institution, is that the loan, we offer the SBA guarantee. Our standard guarantee is 85% for loans $150,000 and under, and 75% for loans in excess of $150,000. What does this mean? Glad you asked. Let's say somebody gets a $100,000 loan and defaults on it. Since SBA guarantees loans $150,000 and under at 85%, SBA will write the bank a check for $85,000. That reduces the bank's exposure to risk considerably. Most small businesses fail during the first couple of years. Why do they fail? Lack of plan. And we already heard that if you fail to plan, you plan to fail. And what's the second reason? Capitalization. They don't have enough money. Now, if you plan the situation right, you'll know how much money you need. And some people think they need $50,000 and they really need $150,000. So it's critical that you plan. So for a startup, the bank likes to get their money back, and they like to get their money back with interest. They've never wanted your car, your house, your boat, or anything else. They want the simplified life of their money paid back with interest. So with the SBA guarantee, it lessens the bank's exposure to risk considerably. Now, we have some loan programs with the standard guarantee. It's at 85% for loans $150,000 and under, and 75% for loans in excess of $150,000. The first one is the Then we have loan programs with a 50% guarantee. The SBA Express and the SBA Veterans Advantage. The SBA Veterans Advantage is an offshoot of the SBA Express and is not an independent loan program. But let's say somebody gets a $100,000 loan, guaranteed at 50%. SBA will write the bank a check for $50,000. So the bank's exposure to risk with the loan programs with just a 50% guarantee is increased. We do have some special emphasis loan programs. We have the small loan advantage with the emphasis on women, minorities, veterans, businesses in rural areas, businesses in urban areas. And then we have the SBA Veterans Advantage. Not only is it for individuals in the military, I know some hands went up when we called on veterans, and there was a third one. Who was the third one? Okay, Lewis. Okay, because I know that Bob, the missionary lady, praised Hagen. Peter. Okay, yes. So not only can y'all get these loans, but a spouse of yours could get a loan under this program. Now let's take a look at these loan products individually. For the small loan advantage, the ceiling is $350,000. It's good news that the standard guarantee is in place because that makes the bank happy. The interest rate is the standard one, where it's 2.25% to 4.75% above prime, depending on loan amount and repayment term. The repayment term, 7 to 10 years for working capital, 25 years for plant, property, and equipment, not to exceed the usefulness of a loan. You can look at any of the banks on page 47 through 59 for a small loan advantage lender. All the banks on those pages may opt to participate in that program. Sadly, we do not have them designated as such. Some of the lenders, we have them designated as a certain lender, but the small loan advantage, we do not. Looking at the SBA Express. Now, the banks really love this program. They get to use their own forms, their own policies. It has the same ceiling as the small loan advantage. As you know, the SBA guarantee is 50% and the interest rate maximums apply. The bank may charge 6.5% above prime for loans $50,000 and under. The bank may charge 4.5% above prime for loans in excess of $50,000. That's sort of high. So some people say, okay, the SBA Express, $350,000, the small loan advantage, $350,000. Which one should I go with? The bank will probably like the one with the higher guarantee, and you will probably like the one with the more reasonable interest rate, and the small loan advantage has that. Now with the SBA Express loan, the banks have different personalities. So a banker was in one of these sessions, he raised his hand, he said, Jackie, we're not out to gouge the small business owner. We're willing to do an SBA Express at 2 3/4 above prime. So dealing on the financial institution. And I can tell you at the end of this presentation where you can go to find out about the personalities of the financial institution. Now the SBA Veterans Advantage, as you know, is an offshoot of the SBA Express. And basically, it's a mirror image of it, only it's specifically for veterans and spouses of such individuals. Now, we do have a bricks and mortar loan program. It is a loan program for land, building, and heavy assets. If somebody's buying a hotel, this would be a good loan program. If somebody's constructing a manufacturing plant, the land, the building, the heavy equipment, this would be a good loan program. With this loan program, basically you put 10 cents on the table and 2 other entities provide you with the remaining 90 cents. The basic structure of a 504 loan program, 50% comes from the financial institution. 40% comes from a certified development company, and you, the entrepreneur, make a 10% cash injection. And let's say you're buying the building, you're buying the land for your business, but hey, you're going to need working capital. You can get a 504 loan for the fixed assets, and then a companion 7A loan for the working capital. On page 25 of your small business resource guide, at close to the bottom of the page, you will, probably page 24, I think I'm here. Page 24, in the middle of the page, you see 504 loan program, and then on page 25, in the first and second columns, you see the certified development companies across the state of Tennessee. If I were you for this particular loan program, I would start with a certified development company, and if you do not know a bank that you want to work with you, Ask them because they know the personalities of the financial institutions, and they can make you aware of what banks may have an interest in your venture. We talked about the 5 C's of credit. And due to injury, illness, divorce, being laid off, and sometimes 2 of the 4, 3 of the 4, the average American's credit score may be going south. Due to this, we have various loan programs that assist people who don't quite meet the 5 C's of credit. One has a denomination of $50,000. It's called a micro loan. And we have micro lenders throughout the state of Tennessee that do these types of loans. Alt, Pathway, Lending, and People Inc. Pathway is the one you would have to choose because Alt deals with certain counties and it doesn't include Davidson. People Inc. deals with Sullivan County only, the Kingsport and Bristol areas. And it has $50,000 and it does have to be collateralized. Let me tell you a little something about Pathway Lending. I talked to a lady there and she said that they don't look so much at your past, they look at your future. And they do ask that you be current on all outstanding debt at the time of application, but they're willing to make loans to people who don't quite meet the 5 C's of credit. And you will find information on Pathway Lending on page 26. And will the interest rate be higher than the bank? Yes, because they make loans that conventional banks won't make. But when you look at a 5 to 6 year repayment term juxtaposed to 30 days, the interest is palatable. And like William said, if you charge up $5,000 with the interest and everything that you will pay, just paying the minimum payment, it's like buying a house. So micro lenders, micro loans represent an option at this juncture, and then it will come to a point where as your credit score readjusts, the cash flow increases, where you can go and position yourself for a loan at a much better interest rate. We also have 2 financial institutions that make loans to people who don't quite meet the 5 C's of credit. One is Superior Financial Group. That's the bank that I was telling you about in Walnut Creek, California. She has found a niche, making loans $25,000 and under. And you can go to the website. Her website address is www.superior, F like Frank, G like George.com. www.superiorfg.com. And in the middle of the page, it will say Small Loan Advantage, $25,000 and under. You can do a pre-qualification exercise so you can see whether they will look at you favorably or unfavorably for getting a loan. And you can look at other information as well. Then we have the Small Loan Advantage. If y'all will cross out SBA Veterans Advantage on the slide, please. Ms. Janita Brown at U.S. Bank makes Small Loan Advantage loans, and listen very carefully. For veterans, she does complete startups. Janita Brown, U.S. Bank, does complete startups for veterans. If you have been in business 6 months, she will make you a loan $35,000 and under that does not have to be collateralized. If you have been in business 2 full years, she will make you a loan up to $150,000. And if you get a loan $50,000 and under, it does not have to be collateralized. And that's Ms. Janita Brown, U.S. Bank, over on Fessler's Line. Now, when dealing with the financial institutions, you may find that you knock on doors and you knock on doors and you're declined and you're declined, but persistence eventually overturns resistance. And let me share with you that we have resources that assist you with the business planning process and the packaging of your SBA guaranteed loan. On pages 9, 10, and 11 of your Small Business Resource Guide, you will see information about SCORE, the Small Business Development Centers, and the Women's Business Center. We have a SCORE office here in Nashville, a group of volunteers that volunteer from 9 a.m. to 12 noon on a daily basis. Small Business Development Centers are open 8 to 4:30, and then we have a Women's Business Center in Chattanooga, and one that's going to have a grand opening January 2015 at Pathway Landing, Nashville, Tennessee, in Metro Center. And when you're trying to gauge the personalities of financial institutions, call the Small Business Development Center. They visit banks in various locations. They know the personalities of them. They know which ones embrace startups. They know which ones embrace landscapers. They know which ones embrace restaurants, and so forth. SBA also has the government contracting program. The federal government is supposed to channel 23% of the contracting dollars to small businesses. And we have some certification programs, some formal certification programs, the 8A and the historically underutilized business zone. They can help you toward that end. And then we have some self-certification programs that help you to that end as well. The Small Business Development Center here in Nashville is having a small business boot camp November 7th and November 15th. Friday, November 7th, 8:30 to 12 noon, writing your startup business plan and financing options for a small business. Saturday, November 15th, 8:30 to 12 noon, no charge. For government contracting, there is going to be a workshop in our office, and the address is on my business card. Address is on my business card. It is going to be November 4th, 9 a.m. to 12 noon at our office on Riley Parkway, and it is free of charge. If you want to attend either of those workshops, shoot me an email and I will route them to I'll write them to the person posted at that site to take care of registration, and I'll get back with you there. Registration is confirmed. I think my time has about concluded. I will be here after the workshop to entertain any questions you may have.